Happy Sunday, y'all, and happy Easter for who of those, those of you, I'm sorry, celebrating Easter. I am celebrating Easter, all right? So I have to take a couple of days off the tube just to make sure, I get that quality time with family and take care of other stuff. Now, I want to share with you in this video something really, really interesting. And it has to be a little bit technical when you look at, the chart, and it's about what we call an indicator in the name of the Fibonacci time zone retracement, all right? And when you look at what I've been able to dig on Reddit, it's really interesting from what the user was sharing, because when you look at this, it actually gives you an indication that something might be coming like what we saw back in June 2021 in the near future. And this will actually put AMC stock price around 275 to between 255 to $280 a share. All right, so let's dig a little bit deeper and give you exactly what this means and how trustworthy should you take, this information is, or should you even trust it or no. All right, so first off, this is what I'm talking about. If you zoom a little bit in here, you can see that this is a Fibonacci time zone, and it's actually an indicator that gives you levels of lows, of very lows, and level of very high. If you jump here on Investopedia, Fibonacci retracements indicate level of support and resistance that are likely to occur. The indicator is useful because it can be drawn between any two significant price points, such as a high and a low. In other versions, you will say a very high or a very low. The indicator will then create the levels between these 2 points. So when we come back here, this little square in green gives you that, Fibonacci kind of indication. And so far, since the beginning of this whole movement, this whole thing with the squeeze on AMC stock, it hasn't really failed yet. So if you look at here, anytime we touch a low, this Fibonacci will indicate that we might hit a new trend. We have a new reversal, all right? So this happened yet here, and then it happened again here. And when you look at this similarity, it seems as if we are heading towards another very, very, very interesting reversal. And when you look at the price chart here, it points you towards, somewhere here between maybe 255, 280, all right? Now, should you trust this Fibonacci? And actually, this is technical analysis. So we do know that technical analysis is one way of looking at analyzing stock, one way of, kind of predicting what the future may hold for a specific stock price movement, specific stock price action. Well, technical analysis, as any other analysis, doesn't work 100% at the time. But if you couple this to have a comprehensive view, all right, if you couple this to another way of approaching the analysis of a stock price action, of a stock price movement, then yet you can have an overview, you can have a bigger picture. So let's look at few other points here, all right, besides this technical analysis. We all know first that, well, what may actually bring this price to 250, 280 bucks? I don't know when that will happen, all right? Because it doesn't mean necessarily that it's going to happen tomorrow or next week or next month. What we do know that is by looking at the charts, looking at these indicators that actually point out to maths and data, there is a high chances that it might happen. Now, let's pull a little bit and look at something else that is happening in the market. Well, in the market, we know that inflation is very high, higher than we expected. We already knew that last March, it was already high. And this month, it went to another roof. And I believe it's going to continue to be higher than we expect just because of two things. First of all, you have oil prices are still going to be really, really high because one of the top traders one of the top oil trader in the world has now stopped, as of Thursday, stopped buying Russian oil. So it's going to push prices a little bit higher. All right, so that's number one. Number two, we are heading towards summer season, and summer season always is the high demand season for oil. So oil is going to remain a little bit higher. And food prices, I don't expect, if oil prices is still high, I don't expect food prices to continue to go down because food gets here by trucks using oil, so, and planes using oil and boats using oil. So just to say that inflation, personally, I think it's going to remain higher. So if inflation remains higher, then the Federal Reserve is going to do something very, very, very more aggressive than the market expects it to do. And we may happen or end up with interest rates going significantly higher, which will shock the system and the way short sellers or big investors with huge amount of debt operate in these markets. All right, so that's number one already. Number two, we have the rules. We know that rules are asking for more transparency from, the big players, from the hedge funds, from the market makers, from the liquidity providers, so, and we also have earnings season are pointing out that, well, the banks are not doing that well given what is happening in Russia. All right, so all of that, if you couple that now with recession fears and everything else, then we might definitely have something coming from what we call the fundamental side of things, something coming from the economy, something coming from the way the market will react to interest rates rising more than expected or inflation being stickier than expected. All of that can cause something, a catalyst that can actually boost the share price of AMC stock to maybe 250, 275, just because the things that may cause short sellers to get squeezed again, to push them into getting out, especially the little short sellers, low little companies that cannot sustain a certain price action or a certain pressure depending on how the market goes. All right. So that being said, if you add that to what the short and these Fibonacci retracement are telling us, then yeah, it kind of makes sense because yeah, we've been waiting this for many, many months now. But remember, with the AMC stock, stuff or things are not just straightforward. Anything that will make sense can just not make sense at all. And on top of that, if I add earnings season coming from AMC, then yeah, definitely we can be poised to a sharp run up like this, pointing and taking us to, the triple digits. All right. But again, it doesn't have to happen just because we think or the data or the chart is pointing that direction, because no one can predict the future. Otherwise, we'll all be billionaires and we'll not be here talking about AMC.